What's going on? I hope everybody had a fantastic day. Today marks the 1 year anniversary to the pandemic lows, and the S&P 500 has seen its largest yearly gain since 1936. Obviously, with the help of the Fed and Jerome Powell's money printer, we've seen a pretty crazy market comparing it to the lows where we bounced at in March at the same level when the S&P was when Trump got elected president down here. So Powell spoke today. He'll be speaking again tomorrow. He's basically saying interest rates won't rise and there won't be any crazy hyperinflation. However, I'm not buying it. I don't think the market is. And in my opinion, as soon as rate hikes come, it's not going to be good for the S&P 500. But in this video, we're going to recap the past 2 days, some trades we've taken in the Discord room, going over supply and demand as it's one of the most powerful tools to use in trading. I don't care what happens in the market because I know my supply and demand zones are my edge. Bull or bear market, uptrend or downtrend, rate hikes or no hikes. These zones are how the market moves. There's no coincidence in any of this. It's organic price action. Before we do begin recap, all I ask is that if you are new here, make sure to hit the subscribe button and drop a like on my channel. Also, be sure to follow me on Instagram. It's a very good trading resource. I post daily trading tips and daily trading recaps on this as well. The link to my Instagram will be in the description below. And without further ado, let's get right into today's action. Every day I post pre-market plans in my Discord room. These just give me my guidelines of where I want to be a participant in the market. And then I use price and volume to confirm if I want to be an active participant and physically put a trade on. So it's very important to come up with a plan and your guidelines and have no emotions to it. So this just keeps me on my toes. So the plan today was we had demand at 3908, also had demand at 3902 and 3880. The demand at 3908 was the one we were bouncing off of overnight, so we had to be bullish and we were targeting pre-market highs at 3932 and then 3938, which was the zone that we rejected from yesterday in the action over here. The real bull case scenario was if we got above the supply at 3938, we would test higher supply at 3957. Going into the market today, now that we have context and we have our zones, what we have to do is be patient and wait for the zones to trigger, and then we could take trades with confirmation accordingly. So going into the overnight session, we'll review yesterday's a little later, but we were selling off and we were making consistent lower highs and also consistent lower lows in this type of formation. As soon as we hit this demand zone overnight, if you trade futures, it would have been a beautiful bounce around 6:30 Eastern. And then the market was slowly grinding up, making higher highs, also making higher lows right into the open. So we had to have a bullish scenario. The first 15 minutes of the market open was pretty choppy. We were moving in a tight range. Volume wasn't really anything significant. There was not a lot of momentum. So I just avoided this, did not give me any real clear long entry signals here. Then we got this push up. Volume was still uptrending. It was still pointing up, which is a bullish scenario. So right now, all the gates are open, all the doors are open, and there's really nothing stopping us from testing our first supply zone at 3932. So now, fast forwarding it a little bit, we consistently grinded up. We made about a 15-point rally or so into the supply zone, and then we got our confirmation to take this trade short, and we aggressively sold off. Volume was decreasing, and this is where context comes into play. Everybody thought the market was going to reverse. It's the end of the world. We're still above all our bullish zones, the demand that bounced yesterday, and we're still above the demand that we bounced earlier in the week at 3880. So it depends on the trade you're looking to open up. But if you're more of a trend trader, not a scalper, and you think that the market's going to completely collapse, we had a little more obstacles to avoid and test before that happened. So we got below the low. We rejected the supply zone. If you go to a 1-minute chart, this is where the proper confirmation was. Once we failed and we made a lower high, we sold off, and then we had that special reversal that I've been making videos like crazy. We've been seeing this a lot, been seeing this often, is we come down, we create new demand, and then we start rallying and making a V-shaped reversal, consistent higher highs, consistent higher lows, and we actually formed new demand and we started rallying. So at this point, this zone proved to have worked. So the key is if we get above it, we base above it, and we create value where buyers are finding true value at higher prices, we're not going to take the market short at this 3932 because we have another zone a little higher where price can rally into, and we do not have any sellers type of confirmation at 3932. fast forward in the market a little bit, we came right to this 3938.25 supply zone, and this was a key level because this was the zone that rejected yesterday, and we had the sell off overnight. We're going to get into this shortly. But as soon as we started failing at 3938, I was seeing pretty aggressive SPY calls coming in. I was seeing pretty aggressive orders hitting the market on the S&P future as well. But there was really no buyers strong enough to take it long. So the basis to this strategy is finding out where majority of retail and majority of the money is trapped and basically fading them or doing the opposite of what they do. Because when other people have pain, that's when we get our gain. It's a zero-sum game. When somebody loses, unfortunately, there is a winner. So I'm failing at this 3938. As soon as we started moving down, I took this trade short around 3935. And as soon as we sold off and started moving up, I covered my shares. I was in with pretty heavy size, so a quick move up would have shaken me out a little bit, especially with how don't want to call it volatility, but because of the whipsaw action down and then straight up, I didn't want to be caught in any games. So not a bad move. My analysis worked correctly. And then this drop right here, this consolidation, we came back up, we tested it, and buyers once again failed to be strong. Sellers again failed to be, or were strong. Buyers were weak. Going to a 5-minute chart, you'll see this test right here. We made another lower high. Then we were just consolidating. This was at the same time Powell was testifying with Yellen. So the market was super choppy. And one thing I'm going to mention is on choppy markets, and I say this to members all the time, when the market is lacking momentum, it's lacking direction, avoid it at all costs because momentum and volatility is your friend. One thing I do want to mention is once we hit the supply zone here on ES, on the S&P 500, this was at the same time majority of equities were hitting supply zones as well. And when the 2 and 2 come together, it forms a very powerful confluence and a very powerful confirmation indicator that leads the market. So at the same time the S&P was coming into supply, Apple sold off of, from that demand. So going to the pre-market plan, we were watching for a bounce at the 122.57 area. If the market could react, pull back into the level, and we could play it long into targeting 124 and then 127.57. So in the morning, did not take this trade long due to the consolidation and due to the chop. I did not get my clear entry signal, although risk was tight and although hindsight looks beautiful. This thing did rally up and down like a roller coaster, failed to stay above the high. And you all know I love seeing volume inside of supply zone. Beautiful rejection. At the same exact time, the S&P 500 came into supply. Very beautiful indicator, very beautiful tool to use. And you could have, shorted S&P like I did, or you could have shorted Apple, followed the pre-market plan. Same exact thing with Facebook. Facebook did not hit demand, but it came right into this 297.56 supply zone, sold off. What else did we have? We had Nvidia. Same exact thing at the same exact time. Came right into this supply zone, sold off, and pretty choppy on the day. There was not a lot of momentum to that. Tesla in the morning, off our demand, was choppy. But equities, they respect the market itself. So I always give precedence to the market, then look at equities. And if 2 and 2 come together, they come to high quality trading setups. So going back to the S&P 500, we did reject this zone up here. Then we failed to make a high. We were consistently making lower highs. Then suddenly around 1:30, 2 o'clock-ish, 2:30, the market started selling off from that supply into this demand that we were watching overnight. No real buyers there. And we came into the 3,900 demand. And really, towards end of the day, you have to look at it like this. The way I look at it is the market's a ticking time bomb. The closer we get to end of the day, the lower quality of the setups are going to be. So yeah, we're coming into the demand around 3:30, 30 minutes before the market ends. You could get a quick little play off of this, but for a real trend change or for a real decent setup, the quality of setups to me and the quality of plays are going to be much lower. So this is the type of analysis you have to do when trading. You have to use market context along with organic price action. It's what I use in the market. I don't use any indicators. I focus solely on what the market's telling me right now based off of supply and demand imbalances. Because as you can see, this is what physically, moves the market. So yesterday's action on Monday, March 22nd, the pre-market plan on SPY or ES was to be bullish as long as we hold above the 3880 and 3/4 demand. Like I said, the same zone was in play because we bounced at it on Friday. Then overnight, the market was, pretty flat, and we wanted just buyers if we pulled back to hold that 3880 and 3/4 zone. The only thing that may stop us from moving higher is the 3918 and 3/4 and 3914 supply. If we stay contained in this range, it's going to be a balancing day. We don't trade balancing days. But if bulls want to take it higher, we need to slice through the sellers at the supply zones or create new demand above 3914, and we will test 3938. So keep those levels in mind. It's pretty much the same levels from today. But going into the market, we opened up. We're well above the demand zone over here. Then the market started rallying, and we came into the first supply zone at 3914, and not one sign of sellers. So majority of people see a supply zone, they think the market's going to reject, and we're going to have a nice put play to the downside. The key is seeing the reaction. The way I look at it is these zones are the advertisers to price. They advertise the levels I want to be interested in buying or selling. And then price and volume itself is the validator, and it validates whether I enter a position or I hold off on the sideline. So we came into the supply zone, we hit this 3918, and then for about 30 minutes after we were inside of the supply zone, we were consolidating, we were balancing out inside of supply. So what that tells me, let's just ignore the balancing out part. A supply zone means there is not an equilibrium, and it's an imbalanced market where supply exceeds demand at one point in the past. So once the market comes back into that origin supply zone, either A, sellers are going to be strong and we are going to reject, or B, we're going to find an equilibrium and we're going to base out inside of supply, and it's telling me buyers are trying to bring it higher and sellers are not trying to bring it lower because we're inside of supply. Or C, we're just going to blow right past that supply zone, slice through it like butter, and that's telling me demand is very, very, very strong. So we balanced out, and this to me invalidates supply just because we're not seeing a reaction from sellers. And we had that plan for if we were to create new demand above 3914, we will test the 3938 supply zone. Then the market started rallying. It was just a grind all day long. And if you were not in this trade long from down here, if you were not in this trade long from supply, to me, if you're chasing up here, or if you're buying, let's just say, I don't know, up here, that's a chase to me. If you're buying up here, it's a chase to me as well. So on consistent grinds like this, if you do not have an entry already, it's very tough if you are not chasing to get an entry. But right according to plan, we rallied pretty much the whole day into the 3938 supply zone, sold off end of day. And this was the same zone we were watching, rejected overnight, and it played into it today, pretty perfectly. Now that we're above the supply, obviously those zones become invalid, and we went over the plan from today. So it's all about market context, like I said, getting a gauge of participants, where are buyers hurt, where are sellers hurt, who is buying, who is selling, putting it in context, trading your zones, following your plan with zero emotions involved, and just eliminating as much noise as possible. And I'm going to end the video there. If you did enjoy, you did learn something, just do me a favor, like this video, subscribe to my channel, comment any questions, follow me on Instagram, and if you want to learn more, check out the course that I offer in the description below. It goes into my overall whole strategy, supply and demand, market context, and options trading. Besides that, I'll see you all at the next video. Peace.